Hey, welcome back. It's Nolan Mathias from Mortgage 360, and this is your May mortgage interest rate update. We're seeing some interesting things happening in the market. We're seeing interest rates on the discounted rates come up slightly. We're seeing downward pressure on the full featured rates. We'll talk about what all that means when we get into the video. And we're seeing some pretty incredible rate specials, which I will get to at the very end of the video. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, please hit that like button so more people like you can see this video. And don't forget about our race to now 25,000 subscribers, where one lucky subscriber is going to win $5,000 contributed to their TFSA, their RSP, or their RESP just for subscribing to this channel. So go ahead, click the subscribe button. It's free, it's easy, it's definitely worth it. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss mortgage interest rates for May of 2021 because it is really interesting out there. We're seeing upward pressure on the discounted rates. We're seeing downward pressure from the full featured rates. And we're seeing some absolutely incredible rate specials out there, specifically on the 3-year and the variable rate mortgages, which, like I said, I will get to at the end of the video. But before we get into all the interest rates, I do want to point out the secrets to getting the lowest interest rate course. This is a course that we've designed so that everybody can get the access to the best information on how to get the lowest interest rates. Now, in a perfect world, everyone would come to Mortgage 360, they'd click on the button and they would get their mortgage through us and we would help them get the absolute best mortgage for them. But we understand that people sometimes have their own broker already, or they have their own bank. They're already partway through the process. Or perhaps they just want to do it themselves and make sure that no stone is left unturned. So what we've done is we've put 18 years worth of mortgage expertise into a 60-minute course that will give you all the tools and all the information you need in order to make sure you get the absolute best rate. We cover things like how to negotiate with your bank, how to negotiate with your broker, what you can negotiate, what you can get included and what you can't get included, things like home inspections, things like appraisal fees. We talk about how much margin's available in a mortgage. That chapter, by the way, is the single most valuable chapter in the course. It will tell you exactly how much you can negotiate and how much you can get off what the bank is basically offering you. And then we talk about all the landmine surprises and things that come along with getting the lowest interest rate and the things that you need to watch out for. We have priced this course to make it super accessible so that pretty much everybody can get access to the information that Mortgage 360 clients have, even though they may not have the opportunity to deal directly with Mortgage 360. My guarantee, or my guess, and what I think, is that most people will get 10 to 50 times the value back that they pay for the course. That's how low we've priced it. In fact, I would be surprised if you don't get at least a minimum of 10 times the value of the course back, just by knowing which things you can negotiate in and which things you can't. So I'm going to put a coupon code in the description below for an additional 50% off the already discounted price. I don't know when I'm going to increase the price on this. I want to do it all the time, but I also have this thing where I want to make sure the information is as accessible as possible. So I'm leaving it where it is for now. But if you're in the market in the next 120 days to 6 months, I definitely recommend that you purchase that course if you aren't already applying for a mortgage with Mortgage 360. So let's get into the actual nitty-gritty of the interest rates. Flipping over to the other screen here and getting you the information that you need. And what we're going to do is we're going to talk about the full featured rates first. So the full featured rates are the mortgages that have the best prepayment privileges, have the best options, come from the best lenders. They're the mortgages that we typically recommend to most clients and that 9 out of our 10 clients choose. And while you may pay a little bit more for them, 0.2% in most cases, they tend to have features that will allow you to save money down the road. And really, when we're talking about 0.2%, typically what we're talking about is the price of a cup of coffee a week. So let's talk about what the interest rates are. First and foremost, for insured or greater than 35% down payment. For a 5-year variable right now, we can get you a full featured mortgage at 1.4%. We can get you a 5-year fixed at 2.04%. And for mortgages with 20 to 35% down payment, there's a range of interest rates. Now, why is there a range of interest rates for 20 to 35% down payment? It's because basically at 20% down payment, that is the amount of down payment where the bank has the most exposure to risk. Anything less than 20%, they have insurance, so it is very low risk for them. At 20% down, that is their highest risk mortgages, so tends to be where mortgages are priced the highest. Obviously, you don't have to pay insurance premiums, so it ends up being a little bit better deal. And then as you get down to 35% down payment, that's where the risk starts to go away, because as the banks say, that's where the client has enough skin in the game in order for them to not walk away from the property. So 5-year variables with 20 to 35% down are priced between 1.4 and 1.45%. For a 5-year fixed, you're looking at 2.04 to 2.24%. So again, these are the full featured rates. You can see that these are all marked green, which means they are the same or better than they were last month. Obviously, these rates have come down a little bit, especially the 5-year fixed rates. So there's some really good deals to be had. Again, when you look at the difference between a 5-year variable and a 5-year fixed, and you look at the fact that it's a 0.5% to 0.6%, I still recommend variable rates. Primarily, one, because you aren't paying a premium for them up front. You don't pay a premium for them in a penalty, because a 5-year fixed almost always has a higher penalty than a variable rate mortgage will have. And the third reason is, if property values do eventually go down, the fastest way to lose all of your equity to a bank is to have a big penalty if you need to sell. So we recommend variables so that you don't have payout penalty risk in the same way that you would with a 5-year fixed. Now, moving on to discounted interest rates. Again, looking at insured and greater than 35% down to begin with. And what you'll see is the interest rates in this category have gone up slightly. So last month we could get these for about 1.2% for a 5-year variable. Now we're looking at 1.25. For a 5-year fixed, we're looking at 1.89%. So this is a great rate, really good rate. However, if I'm going to take a discount mortgage that has something like a no refinance clause in it, I'm probably going to look to that variable anyways, because we're at that 1.25. But then when I look at the variable at 1.25 and a no refinance clause, which is what is one of those landmines and surprises that comes along with a discount mortgage, well, the problem with it is then I'm at the mercy of the lender if I ever decide that I want to lock in, and I could end up having to pay a significantly higher rate. So, I don't love discount mortgages. Again, 9 out of 10 clients choose a full featured mortgage, but we believe in transparency. So knowing that these rates are out there is important to us. Getting to 20 to 35% down payment, 5-year variables between 1.25 and 1.3%. So really only a 0.15% difference between this, a 5-year variable discounted rate, and a 5-year variable full featured rate, which for 15 basis points, I'd make sure I had the ability to refinance, the ability to switch lenders, so I don't lose my negotiating power if I decide I want to lock in, or if interest rates get better, because there is that potential that variable rates could go down and we could end up seeing even lower rates and the opportunity to refinance into lower rates. And then 5-year fix at 1.89 to 2.04%. Again, if you look at the board for discounted rates, they have pretty much all come up at least 5 basis points. And the reason why, I think, is just because lenders are losing the appetite for the ultra low interest rates, because it's a busy market. I think a lot of lenders are overwhelmed right now. If you see the volumes and the turnaround times, things are getting slower to do. So I think the appetite for the discount mortgages is somewhat going away. And I think that's a good thing, because it will encourage people to take full featured rates when they're only priced 0.15% apart, which again is typically a cup of coffee a week, depending on the size of your mortgage. If you are single and you're buying for a very low valued price, it's probably a Tim Hortons. If you're in that $1 million price range, it's probably a Starbucks a week for you and your spouse. So the differences between those rates are negligible. Now, I did mention that there are some really good rate specials out there. The first one is a full featured rate, 3-year fixed. It is priced at 1.54. I think for people who are risk averse but still want to get the low rate, this is an incredibly good option right now. I'd still tend to take a variable over it just because of the payout penalty risk, but a really good option if you want that low rate with a fixed rate for the next 3 years, but you don't want to go down the road of taking a variable. And then the 0.99% mortgages have reared their ugly head again. Obviously, HSBC never really discontinued this product. However, my understanding, and I don't have firsthand experience, and HSBC is a great lender, but it's been tough to get deals approved from a timeline perspective just because they've been overwhelmed with business. There is another lender in the broker channel that is now offering that 0.99% interest rate. Full disclosure, I have an ownership interest in that company, not because I bought into the company, but because when I was recruited to a national brokerage firm back in 2009, part of the brokerage firm owned that lender, or the lender owned the brokerage firm. I'm not sure. Anyways, they gave me shares in that. So I feel compelled to disclose that. It's one of the smaller lenders out there. I'm not going to state the name of it. I know factually 100% it is run by one of the best mortgage executives in the business, probably not just in Canada, but in North America. I have huge faith in him. Lenders kind of gone under the radar for the last few years. We haven't sent much business to them. It's going to be yet to be seen whether they can service the amount of business that they're getting. And as far as the mortgage goes, they've confirmed that it's a full featured mortgage. It's a 3-year variable at 0.99%. I don't have firsthand experience with it, and I don't ever feel compelled to promote anything that I don't have firsthand experience with. But if somebody wants to try that mortgage rate out and go to that lender and have a conversation, we're more than happy to. We are signed up with them. We can submit to that lender. And we're happy to allow somebody to come along and be the guinea pig if they want to be. So that's your May interest rate update. By all means, if you feel compelled to have us help you through the mortgage process, go ahead, click that apply button in the description below. And if you would like that Secrets to Getting the Lowest Interest Rate course, that link will be in the description below as well. If you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where one lucky winner is going to win $5,000 towards their RESP, RSP, or TFSA. Cheers, and we'll see you on the next video.